Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go over the Finding Value donations portfolio. If you want to donate to the channel, it's up to you. It's in the description link below. It's the PayPal link. What I'm doing is I'm putting all that money in this account and putting it into companies that I think are good. What it does is it's basically telling you guys what I would buy, what sector, what company, why I'm buying it, where I'm buying it, the quantity, and all that. And that hopefully helps you guys at least figure out why I'm buying things. Some of them are speculative plays, some are value plays. Value means that it's a company that is making good money and the fundamentals are improving rapidly for that, which means that the company is more or less mispriced. At least that's kind of my viewpoint. Whether it be the cash flows that they're generating, the debt that they're paying down, whatever it is, the earnings that they have, or other companies that are speculative where they could potentially have a lot of growth given where we're at today. So it could be, I have a fuel cell company in here. I have a seed company, which is a Chinese seed company in here. And then I also have another solar company, and it's not much. That's my speculative plays, and then the most everything else is all value. So I'll go over, let you guys know kind of what I added to the portfolio, why I added it, and we'll get in here. It looks like, so I think the worst performer of the portfolio is Aluminum Corp of China. Aluminum's been pulling back. So let's say I mistimed it, right? And you guys, I'm adding this in here. I'm not really even doing too much timing. I'm kind of going in there. I'm creating this portfolio. I have aluminum here. This is a silver company, a couple of silver companies. We got some oil companies, a coal company here. Now I did make a new addition. I bought Castor Maritime, however you say it. It's CTRM. CTRM is in kind of the dry bulk shipping area. And what I was looking at is I was looking at kind of the dry bulk. So we'll put dry bulk shipping. Baltic Dry Index. We'll look at the Baltic Dry Index. And what I'm seeing here, kind of in the long term, so we're at this big long-term resistance and support level that's been going across here. And what I'm showing you here today also, you can see this on my website. It's in the links in the description below, finding-value.com. It's got all this information there. I go over all of the dry bulk shipping companies. I'm only showing one of them here. But this is the Baltic Dry Index. And one thing that gets me kind of excited is we've got this long-term resistance and support level. Basically, we've got the resistance level here, hit its head, came up, came back down, and now we blew through this resistance level. We're doing a retest. That's why I have this line coming here. It's a retest of the support, and then we're going to head higher. So I do think that the Baltic Dry Index will go up quite dramatically here, I think, over the next commodity bull market. The last commodity bull market, you could see it broke out, did a retest, and then we had another massive launch. I think we're going to see something very similar to this from 2001 all the way till 2008. So I do think that this is going to rocket up very similarly to this last bull market. And I wanted to get some shippers. I don't really have any shippers. So looking at the shipping company, CTRM, this thing is in the bottom of no man's land, and we're doing this double booty bottom here. Let me zoom in here real quick, guys. Auto, there we go. Here's your double booty. It's a big old one too, and we are very, very low in this lower right hand side of this pattern. And if we dive all the way into the corner here, we've got the nice big buying pressure, small selling pressure type candlesticks. I'm an accumulator down here. We're basically at the bottom of its booty of one cheek. So this is a single booty. I guess it's not a double booty. It's a single booty, and we're on the right cheek there, and we're just right at the bottom. So well, close enough to the bottom. We're not at the bottom of the bottom, but we're close. So this is one that I'm looking at. If you kind of just look at the quarterlies here of the financials, their net income is growing quite rapidly. So is their revenue. I think it's a decent company. So you know what? I'm going to, I picked up a little bit in the donations portfolio, and I'm going to let it ride. It's actually a decent sized position in comparison to a lot of the other positions. And I think it's a good bet. And that whole sector looks pretty good. They're all down. They're all trying to break their resistance lines to the upside. Castor Maritime is a pick by one of the Finding Value commenters. He said, hey, take a look at this. I did. So thank you for that. Whoever that was, I can't remember their name. Thank you for that. And the whole index and the whole sector looks really good. Looking at some of these other ones, looks like the majority of the portfolio. Remember, this is only 5 days or 6 days. It's probably 6 days old. It's probably about 6 trading days old, I think. So coming on down, we've got pretty good outperformance by Peabody Energy. EXK has done very well. It's a big, solid performer. Helix Energy Solutions, another solid performer there. Intrepid Potash is the leader at 46.6%. Would I chase this in my portfolio right now? Probably not. Probably not. Wow, Centrus Energy really turned on me. But I'm going to hold on to it, guys. I'm not selling it. 18.8 for Noble. Seed, this is another one that I went into, up 8%, up 20% today, or in the portfolio, not today. It's up 8% today. A lot of these are engineering or energy service companies. I did add a little bit more to Northern Oil and Gas. Was a little while back, 2 days ago. So I added into that as well. Seed is done well, and Tidewater's done real well, 36%. That's been a rocketer for me. I do have a couple of ones. The solar one, of course, it's biting me in the butt for buying it. It was up. Now it's down a little bit, but guess what? I'm just going to hold on, guys. Looking at, so Centrus is down, and then my biggest loser is Aluminum Corp of China. Now, I'm a huge bull. Let me go into this, right? I'm a huge bull in aluminum. I really am. After reading that article, after looking at the market supply demand deficits, we're going to run into shortages of aluminum. That's a fully integrated company in terms of vertically integrated. I think it's a good bet. Maybe I just mistimed my buy. So I have that one. It's down 20%. The question is, do I get scared and sell it? Or do I look past my 20% loss? I look forward and say, what can I do from here? Now, if I look at the portfolio, and I'm going to zoom out here real quick. It's 2% of my portfolio in terms of percent holdings. So I did a very small amount. Basically, if I get cut in half of this position, which I don't think I necessarily will, maybe I will, we'll see. It would affect maybe 0.5 to 1% of my total portfolio if I got cut in half. The question then is, what do you do? If you're a big bull on aluminum, if you see those market deficits out in 2024, you know what's going to come. What do you do about it? You're an investor. You own it. You're down 20%. Andy, or Finding Value, what are you going to do? You know what I'm going to do? I'm not going to do anything. I'm not going to do anything with that position. I'm going to leave it. And you know what else I'm going to do? If it gets low enough and we start to see it bottom and start to turn around, I'm going to add to it. That's what I'm going to do. So when you guys are looking at this, and it's going to happen to you at one point. It's happening to me right now, down 20%, like this. 6 trading days, boom. That thing reversed. Let's take a look at it. This is all important because what you're doing is you're learning the lessons of how to invest here. And you know what? I'm in it with you guys. You're not going to get this perfectly right, and it's pulling on back. Here's your I was looking at this saying, oh, we're good to go. Let's go higher. We're going to try to break out of this longer term pattern. Perhaps with aluminum being so high that this was lagging and we were about to break to the upside. We hit our head, come back. I thought maybe we could take another run at it. Well, it still looks actually not that bad. But let's just say this is pulling back, and it's pulling back quite hard. We're getting small little buying pressures, big selling pressure. This is probably going to pull back to a very good good amount. Now, do I go run? Do I go sell my position and start running? I'm not going to do that. What I'm going to do is I'm going to wait. I'm going to wait for this to bottom on ACH. I have a small position in my portfolio that I'm watching. It's right here. We can see it. And when it bottoms, I might buy some more. I'll do a little bit of adding into it. So I'm looking at that. And then another one that looked really good was CENX. It ran up. This is pulling back as well. The whole sector is pulling back. It isn't just our companies, but it's pulling back. And maybe on this big old pattern here, I can draw it here too, that it comes on back a little bit more, get a return move, and then we're going to head higher again. So I'm going to be looking for it. And if I determine that that is a good time to be buying, it bottoms and starts turning back up, I'll add in some more. That's just the way that I'm going to view it. So that's my strategy. In this portfolio that I've got behind me here, this guy here, in this portfolio, I am setting up this portfolio not to be a trader. I'm setting this up to be an investor. What I am doing is I'm identifying trends in the market. I'm looking out in the future, and then I'm saying, what are the market balances and deficits? Those market balances and deficits are what's driving this portfolio. The short-term technical trading is just trying to time my buys as best as I can. That's what's getting me the first initial kind of push up. So I'm looking at the patterns. I'm saying I'm gonna cost average in here, get a couple of my shares, and see if I can get that boost in the portfolio to come on up. Now, the companies I'm buying are precious metals, commodities, and I've got a few speculative. This few speculative, I can afford to take those risks in the portfolio. And the risks, when looking at the portfolio size that I'm taking, look on my right-hand side here. If you look on the right-hand side, I don't really have anything that's over 10%. I've got CTRM is 7.5%. I've got fuel cell at 6.6%. That's my speculative play. And then I've got a seed is 6.1%, and then UROI is 6.8%, roughly. So that's what I've got. My biggest positions are in the 6-7% range. Everything else is kind of small. So what I'm doing is I'm going after the largest asymmetric bets. What are asymmetric bets? Gigantic rewards, and then my downside risk is somewhat limited based off of the technical analysis and where we're buying it. We're trying to buy things that are down, that are breaking patterns and trying to break higher. I'm buying it when the ratios are favorable for these commodities. I'm buying it when the market conditions are favorable for an inflationary market condition with real negative rates, which is going to push interest rates higher, forcing money into our investments. Money flows is what moves stocks, not fundamentals. Money flows. The fundamentals may be good, but the money has to come and flow into it. That's how stock prices move. They don't move based strictly off a company making more money, especially commodity type companies, because people become interested in commodities and then a huge money flow comes flowing into it. So what we're looking for is we're looking for money flows, and that's where our ratios come into play. The ratios tell us how things are transferring about. So our timing is really based, and we're talking about long time frames here. We're talking time frames of 5 or 10 years, not time frames in weeks or months. I'm not trading this. I am investing in the companies for the long trend that is coming. And the trend may be longer than even 5 or 10 years. This commodity bull market might span over decades. We're talking 2030s, 2040 even. And there's been some speculation on some long-term commodity bull markets that is the case based off of money flows and debt and all this other stuff. But a commodity super cycle could last for longer than what I'm even saying and span over multiple real estate cycles. So this portfolio, I think, is a solid portfolio. And if you look at the companies that I'm really going after, I'm not going after exploration companies. I'm not going after ones that are really small. I'm going after things that they've got production, they've got some maybe small to mid-cap type movements where I think the risk reward is really good. I think that the rewards are big. They have very good leverage. and the risks are quite small. Now, if I start to push the leverage more than what I have in this portfolio with some of the companies, your risk may go up dramatically, and the rewards may not go up the same amount as the risk that you're taking on. So if you're have a portfolio that's got no sort of income, not dividend income to the investor, what I mean by the company's not making any income, it's you might be in a situation where they may not go up as much as you think they're going to go up. If they have a bunch of income and they can grow that income, they can grow production, that's where I get really interested because then it's a super value play. And they're more than likely going to move with the price of the commodity itself. Exploration companies, it's hit and miss. It really is. So with this portfolio, if you notice, like Aluminum Corp of China is a big vertically integrated company. That's in the billions of dollars. That's kind of a large cap. So I wanted to make sure I get that, because if aluminum blows up and they've got a vertically integrated company where they can handle everything from X to Z, that's perfect. Because then they can handle it all internally. They have total control over their input to output of that facility or whatever they have. It's a vertically integrated company. These other ones that have to ship everything around in an energy crisis, it's like, I don't want that. So I mean, that's kind of why I chose that one. AG is a solid mid-cap company. Same with BTU and CDE, CDEV. They're all small mid-cap type companies in the entire mix here. So I think it's a pretty solid portfolio. There's a developer here, PLG. That's more speculative. That's for sure. And I'm just going to hold on to it, guys. I'm not going to trade in and out. Now, you're going to see this portfolio fluctuate. It's going to go up and down. We got my initial kind of, I try to time it as best as I can. Now we're at the whim of the market. We're at the fundamentals of the companies now. And their cash flows and whatever happens to these companies is going to be based off the either the commodity movements or the fundamentals of the company. And right now, the portfolio is up 8.27%. I could be down at some point. We're going to see this fluctuate all over the place. I'm down minus 0.42% in my COPX holdings down here, which is 2% of my portfolio. So I've got $51 sitting in there. I think another 100's coming. I'll let that sit and go in there. What other opportunities am I looking at right now? I'm going to put that on the website. I already put some opportunities that I'm looking at on the website. That's going to be available to the Platinum members. So I'll let you guys know. You'll see what I've done. I'll basically flash you guys the companies I'm looking at on the website, but you'll see it in the donations portfolio after I make the move, and then I'll report it on here. But if you guys like the content, give me a thumbs up, subscribe to the channel if you haven't already, and thank you for listening. This is Finding Value.